Let's bring in John Lovallo, UBS Homebuilders, home building products analyst. John, thanks for being here. We heard from some of the home builders recently. We've been getting home builder confidence numbers that are not great here. There's so many constraints on these companies' business. Let's start with mortgage rates here and how you view the trajectory here. Do we continue to see pain all the way up as mortgage rates continue to go higher, or at some point do consumers make an adjustment?
It's a great question, and thanks for having me. I would say that historically, when we have seen these sort of sharp moves in rates, there's always an adjustment period. It takes time for consumers to realize that, hey, we're not at that 3.25% rate anymore. We're closer to 6.25%. But let's take a step back and see what we can do to make things work. And there's a lot of levers that the home buyer can pull. You think about the first-time home buyer in general. I mean, you can move to a smaller footprint, further away from city centers. There's a huge in-migration trend in the U.S. where folks are moving into the Sun Belt, into lower-cost areas. There's a massive wealth transfer that's going on in the U.S. $68 trillion being channeled from baby boomers to millennials and Gen X, and there's a lot of student debt relief going on, and even more in the pipe. There's been $25 billion so far. So things are tough when rates move very quickly. There will be a reset period, and there are a lot of levers that can be pulled.
Okay, and so there's a lot to break down even within that. So I guess starting things off with where home buyers do have any type of leverage, because for the builders, the confidence, that has sputtered. We've seen that slip for consecutive months. Where, I guess, are home builders going to start to see some of their confidence return? And it seems like some of that, or much of it, is directly hinging on some of the supply chain concerns also alleviating themselves.
Yeah, really good question. I mean, there's a lot going on in the market right now. Consumer demand has certainly moderated. That's to be expected given what we just talked about. But there are lots of supply constraints still in the market. The fact that builders getting land even zoned and entitled has taken a tremendous amount of time, much more than it would historically. So what does it take to get builders confident again? It's a good question. I think that, one, we're starting to see some easing in the supply chain on the margin. So that will certainly help. And the moderation in demand is going to also help that. But I think what's interesting on the consumer standpoint is that we've seen over the summer months, and this was actually reported by both KB and Lennar yesterday that reported, that we've seen improvement, at least sequentially, through the summer. And the summer is historically a slower time. So this is really unseasonal, the strength that we've been seeing. Now, it's not great, but we are seeing a little bit of signs of improvement, which suggests perhaps that the consumer is getting a little bit more comfortable with rates.
John, we talked earlier in the week to the president of the National Association of Homebuilders, and granted, his realm is much more political than yours, but he did interestingly point the finger at policy in part as being to blame for some of the weakness in the housing market in terms of zoning not being more favorable, for example, and also, of course, the effect that the Fed has had on interest rates. How do you view those issues and whether anything's going to change on those fronts?
That's a tough one. Yeah. I think that there are certainly some restraints that have been put into the market in terms of regulation, whether that's on the land side or just zoning in general. And that's a challenge across the board. I mean, I think on the margin, maybe it's gotten a little bit worse. But I think it's always been somewhat of a challenge. In terms of rates, I mean, Powell's in a tough spot where we need to get inflation down, and I think that they're he and his team are doing the best to kind of manage that. Where rates go from here, it's very difficult for us to tell. But at the end of the day, people need homes, and there's still homes that are sold. And I think that will be good for the home builders over time once we can kind of get a little bit more comfortable with the current environment.
That's really interesting because previously there was this advice to prospective home buyers to wait for this pivot in Fed policy. But now that we know that the pivot has essentially paused in any type of fodder for conversation, where are we going to see home builders, or home buyers rather? Should we see them? Should we expect to see them kind of rush in to try and take advantage while rates are lower before they get even worse?
Perhaps. I think right now, though, we're still in that adjustment period where we saw about 140 basis points of rise, since late summer. It's really been sort of unprecedented times. So I think there is a reset period that's going to need to happen. Now, will folks rush in and try to, beat the next leg up? I don't know that anyone knows the answer to that, because no one really knows the direction of where rates are going. And I think that's a big challenge for not only home buyers, but for investors in the stock, is we don't know where rates are going. So it's really tough to figure out what you're underwriting when you're buying, agreeing to buy a home or buying the stocks.
John Lovallo, UBS Home Builders Building Products Analyst. Thanks so much for the time this morning. Appreciate it.
Thanks for having me.
Definitely.